because big headlines early this morning, and we've only been talking about tariffs. That is the big news of the day, but the markets seem to be taking it really well today. In fact, on the bottom of your screen, you can see the recovery in the broader market. 0.7% uptick coming in from the day's lowest point for mid cap, 1% recovery for small cap. So Cheryl, at least broader markets are holding up well, and similar could be said for the Nifty as well.
Absolutely. No points for complaining at this point in time, actually, Snehi, given the fact that, yes, we've seen a healthy recovery for the benchmark indices from the day's lowest point. Broader markets also recovering. You also have Nifty Bank that is in the positive territory. Pharma index is roaring in trade, seeing the biggest intraday gain since September 2020. You have the advanced decline ratio, which is very much tilted in the positive territory. So yes, you had this big date that was hanging, or a big overhang for all of us. That was April 2nd. It's come, it's gone. We've got the retaliatory tariff. The Liberation Day is done by Trump. 26% tariff coming in on India. That is a reciprocal tariff. But it has impacted a couple of sectors, like the chemical space is under pressure. You have the IT index that is under pressure in trade today. You have some of the shrimp exporters that are under pressure. But you also have some bright side also, pharma. Everyone was talking about pharmaceuticals being actually hit by the tariffs, and that one has escaped this time around. So you have the pharma index as the top sectoral gainer, 2.8% uptick coming in the pharma index. You have Sun Pharma, Cipla, Dr. Reddy's, Lupin, Aurobindo Pharma, all of them seeing really strong gains in trade today. Talking about some other gainers then, apart from pharma, you have Shriram Finance, which is seeing gains of about 2.3%. Ultratech Power Grid also holding on to positive territory, while on the flip side, like I said, IT is under pressure. So you have your top 4 Nifty losers from the IT pack, namely HCL Tech, TCS, Infosys, as well as Tech Mahindra. And you have Bajaj Auto also that is under pressure in trade today. Remember, Bajaj Auto came out with its auto sales numbers also earlier this morning. Talking about the sectoral front then, it is pharma top sectoral gainer, PSU Bank holding on to gains, while it is IT, metals, auto, they are the ones under pressure. And remember that these are primarily global or global facing sectors. So they are the ones that are under pressure in trade today, Shrishti. So I beg your pardon, Snehi.
So the tariffs have got us in a jiffy, and clearly Cheryl, you too as well. But well, yes, lots to talk about in today's show. Other than your queries, let's also bring on board Sharmila Joshi as well as Kunal, and first discuss what the tariff impact is going to be like. We'll have them joining with us shortly. But also on that note, let's just quickly take a look at some mid-cap stocks that are doing very well. Kunal, case in point being the pharma pack that Cheryl has spoken about. So pharma is doing good. IT on the flip side, on the other side of the spectrum, doing very badly. Somewhere in the middle is this entire FMCG pack today, and the biggest loser in fact from FMCG is Dabur today, on the back of a very weak Q4 update coming in. Fundamentally, the FMCG pack has been spooked for quite some time. Rural is, on the way of recovery, but urban is being shaky. On the charts, what is Dabur looking like to you? And overall, what would you make of the FMCG pack? Since it's not very exposed to the US tariffs, so it's somewhere in the middle. On the charts, what is the pack looking like to you?
So I think we are now at a point where, Snehi, that most of the FMCG stocks are coming at a value buy. So I think price-wise, for example, Dabur, even after this 5-6% kind of a cut, the stock is seeing today 460, 465 levels for Dabur. I would actually believe that this could actually be a good territory for traders to start going for a contra long, because we've seen historically that whenever the FMCG stocks go into a 30% kind of a correction on a 6-month to 1 year basis, they've actually become good points where long-term investors have benefited. Now it may not be the exact bottom for those stocks, but then when you look at this relatively, say over the next 6 months, 1 year, 2 years kind of a time frame, then these price points could actually become as very good value points for long-term investors. So it depends on your time frame, on your portfolio construct, but I believe that FMCG stocks at current levels could be a good add into your portfolios.
All right, so that's the take coming on the FMCG space. We have also...
If you like this video, then like, share and subscribe to ET Now.